So today I'm going to do a video that is definitely worth doing and is definitely worth addressing this subject. When to sell DraftKings. So this is a subject that's been coming up a little bit more. If you're on the Discord, you would have seen on there, we've been talking about potentially, is there a time to sell DraftKings? And if you do want to get access to that Discord, we are currently doing a Black Friday sale, which is £39 for the full year. Gives you access to 100 videos, and also you get to know what I'm buying and selling in real time. So if I ever do make a move in DraftKings, you will see it on there. But getting back to the point is DraftKings stock has been a phenomenal year. From a year ago, this stock is now up 250% year to date. A year ago, this stock was $11, and now we are pushing towards $40. That is absolutely insane. If anything, that shows you what the stock market can be like. One day or 1 year ago, a stock can be absolutely down in the dumps. No one wants to own it. No one's saying anything positive about the stock, and then all of a sudden, a year later, it's the best thing since sliced bread. Everyone wants to own it. The institutions are piling in at 52 Ks, and you're like, well, you could have bought it a year ago for $11. It's absolutely crazy. And for me, honestly, a year ago, this was a stock I was down 40-50% on. Now it's a stock that I'm up over 40% on, which is a massive turnaround. And obviously, for me, that's really important because, as I said on the YouTube channel a year ago, even 6 months ago, this channel every so often backs a stock. And when I back a stock a big time, like I put the branding behind it, it's got to really work out. And through the kind of 2017, 2018, where the likes of Microsoft still own that today, we're up 250%, and I've sold half it out for 100%. We had the likes of Meta, obviously we're up over 100% on Meta. We had the likes of Greg's in the CV dip, and the stock is up, went up over 100%, sold half position out for over 100%. 2021, not as good in that time frame, but you know, it's the time frame where a lot of stocks got killed, a lot of valuations get killed, the likes of like S4 Capital, for example. But I still think that will come back, don't get me wrong. I think when digital marketing comes back, I still think that company will do very well. So, I mean, not a bad track record at all. But then the newest stock that I kind of backed from around the midpoint in 2021 into 2022, 2023 as well, and obviously in 2024, the kind of branding the channel's been behind is DraftKings. You guys know that is my big backing stock now, the one that I've been putting the money behind. You know, you guys saw in 2022. I mean, the amount of times I was doing stocks I'm buying videos, and DraftKings was in the month of January, the month of February, the month of March. Buying. I was buying loads of it, and it's great now to look back in a year's time, and the rewards are there. The stock has been absolutely amazing. For me, I've got the return. I'm up the most I've ever been on the stock on DraftKings on a cash basis, not on a percentage gain. Obviously, I've made more stock gains on a percentage basis, but on a cash basis, that is the most I've already been up now. So if this stock ever comes on to be a 5-bagger or a 10-bagger, it'll be absolutely amazing. But even now, I'm still roughly really good on the position, and it's good to get those rewards after I backed it so much. I mean, you imagine if I got this stock wrong, I would hear DraftKings in the comment section forever, every video I do for the next 5 years. So obviously, it's not going to get mentioned now because it's done very well. But obviously, that was very, very important that it does well, and it has done. And obviously, with the stock flying at the moment, what's my kind of update for around selling DraftKings? For me, I don't really need to buy DraftKings. I don't need to buy DraftKings because I bought so much previously. Like, my position size is very good. I don't need to chase the stock at all. I'm just happy to let this stock run. And I think a few people did that as well. I think a few people backed DraftKings massively, and they're up a lot as well as me. And you know, with the gains that we've had, it's been easier to outperform the S&P 500 this year, which has been really good to do once again, to get back onto that track of, you know, beating the S&P 500. So with all that kind of together, is there a time to kind of consider selling it? Because the stock has obviously done really well. The valuations have risen so much. And I thought I'd talk about 3 key points for me today. That is the 3 key points that I'm thinking about when it comes to DraftKings. So the first of all is any sort of threats. The next thing is long term and any positives that we'll have for the long term. And the next thing is position size. Because don't forget, one big key thing for me in DraftKings is that I bought it so much. It's my largest position. So now that stock has also swung to a 40% gain, it's got a lot of wealth tied up in there, and that's something we're also going to talk about today. So there's a few factors in there anyway, so I hope you enjoyed the video. So from a threat point of view, is there any kind of threats with DraftKings? Well, the biggest threat that everyone used to DraftKings around a year and a half ago is the company is not profitable. Now, technically the company isn't still profitable, but they are moving to a EBITDA point of view profitable, and they are forecasting profit in the next few years. And we've seen the losses massively come down. So that threat has gone really minimised right now, and it doesn't seem an issue. And without doubt, you know, you look at DraftKings, it's probably going to be in profit and good amounts of profit, especially when you look at the Investor Day very soon. So that threat has kind of disappeared that a lot of people used a few months ago. And the people that were saying DraftKings is going bankrupt at $11, that's what they were using, and obviously that's not there anymore. But I never thought that was a serious threat. Now, there is a threat that I am worried about that has come onto the scene in the last couple of months. And that sort of threat is this one. ESPN. So ESPN, as some of you guys are aware, or may not be aware, but I think most of you are aware if you're following DraftKings, has come on to the sports betting sector, and they have linked up with Penn National. Penn National used to have Barstool Sports. Basically, they bought Barstool Sports. Barstool Sports struggled. Ended up with them having to sell off the company. I think they actually sold it off for like £1 or $1 or something only a couple of months ago when they partnered with Disney. So Barstool Sports and Penn National worked together. Penn National had already been in this space and they failed. DraftKings, FanDuel took the big amount of share because they had the best platform. People that say there's no moat around here don't know what they're talking about. There's moats in here. The best platforms will win, and DraftKings currently has one of the best platforms. So as long as they have the best platforms, they will be good in the longer term. Now, ESPN has come online. Now, the threat is that obviously they have the ESPN branding, and branding alone might be attracting a few people in. As well as that, they're chucking a ton of cash into the market to try and attract the customers. So this is a little bit of a threat. Now, there's two threats here. There's a short-term threat, and as well as being a short-term threat, there's a long-term threat. Now, the short-term threat is on the upcoming quarters. So the upcoming quarters in Q4 and Q1 in 2024, what we might see is DraftKings show slow numbers of gaining customers, because all of a sudden, all the new users are going to go, oh, I can go to this for DraftKings, or I can get a double the offer from ESPN Bet, and they're going to go to ESPN Bet. Now, eventually, they might try DraftKings out, and then eventually, after they've used all the free bonuses up, then they're going to choose the platform that's the best one. But from a short-term point of view, I think we will see some sort of wobble in the DraftKings numbers. Now, long-term, that's the big issue, because we want, on the longer term, once all the free bets are used up, people are going to choose the platform they like the most. And that's where we need it to be DraftKings. And I think it will be DraftKings, because when you look at what ESPN have, they've basically got the logo and stuck it on Barstool Sports. What happened last time Barstool Sports competed with DraftKings? It failed because it wasn't a good platform. So I think from an ESPN point of view, they're not going to do that well, because they're just using Barstool Sports and that flops. They might do a little bit better because they've got a bit better branding with it being ESPN. But the platform isn't as good as DraftKings. So I think DraftKings is okay from a long-term point of view at the moment, as long as they keep improving. Short-term, I think we could see a wobble in DraftKings, but we'll see what happens. Long-term, the key target is from making sure that people stay on the platform on DraftKings. So long-term, we still need to have the best platform. And if they do, and if DraftKings are able to beat ESPN, if they keep the market share they have now for the next 5 years, without doubt, I'm going to be sitting on at least a 5-bagger, in my opinion. But yeah, so the long term, it's looking okay. There is a short term threat, but long term, it looks okay. Long term, when I look at the long term from where I was maybe a year ago, long term is probably getting a little bit better even. You know, you look at the long term, the TAM's growing even bigger, the states are growing faster, becoming profitable quicker. You look at the growth is staying longer than what people thought in states. You know, when you're in a state and you've been in that state for 3, 4, 5 years, they're still growing massively as well. So when you look at long term, the market size, and you look at the numbers that DraftKings are doing at the moment, and they've still only got like 50% of the market online for sports betting. iGaming is only like 5 states out of all the states in the US. There's so much potential still to go for. So in the longer term, I'm probably more bullish on DraftKings now than when I were a year ago, which is saying something. So long term is very good. Short term is a little bit of a worry. Long term, on the ESPN side, I think they'll be okay. So when I look at this company here, I think that there could be some pain in the short term, but long term we're going to be okay. So from this point of view, I look at that and I go, this is still a stock I really want to hold for the longer term. So I don't want to sell the whole of DraftKings. Now, the only little thing that I'm going to take into consideration is position size. So you guys know me, I committed a good, I would say at least 25%, but realistically I think I'm probably up to 30%. I probably committed about 30% of my portfolio into DraftKings. Now, I'm sure some of you guys have seen me talk about portfolio sizes before. 30% into a portfolio of one stock, don't do it. I would even say with the likes of Microsoft and Apple or Google, I would say it's even risky taking 30% of them positions into your portfolio. Now, a few people would disagree, but in my opinion, I think that's a little bit risky. The fact I've done it with DraftKings is probably, once again, a little bit risky, but hey, you know, I thought I was so sure DraftKings was going to work out 2 years ago, and obviously I got it right. If I got it wrong, that would have been a horrible story, but obviously, you know, got it right. But 30% is a lot, because I always say worst case scenario, and this applies to like Google and Microsoft. Realistically, let's say a competitor comes out and destroys a lot of the market share in a year or two, and that out of nowhere they come out and they destroy your company's, you know, it takes a lot of the growth away from your company. Let's say really worst case scenario, let's say this company, biggest, all over the news, one of the biggest frauds ever, it turns out DraftKings have been fudging the numbers. It's same again, you know, it ends up that Microsoft have been, you know, fudging the numbers. Let's say Apple, an antitrust of Apple comes out and they say that they've been, you know, there's something going on with Apple where there's a part in the iPhone that you actually don't need, and they've been charging X amount that you didn't even need to pay for because it's not even a working part in the iPhone. It's something, you know, something on them sort of lines, something really crazy. Now, I always like to think worst case scenario. Let's say that overnight that stock goes to zero. You know, you're really unlucky, but it happens, and that stock goes to zero overnight, and you lose all your wealth. If that happens, would you be in a position to go, you know, like, oh no, that's awful, but okay, this is going to sting me for the next kind of maybe year, 2 years, but I can come out the other side of it. The place you don't want to be is where you wipe out major amounts of your wealth. And that's why for me, I always think your biggest position should only make up 10%. 10% would be a point where you go, oh, that's not good. But you've got 90% of your other portfolio that hopefully can drag that out. If all that goes well, you will make up them gains in a few years, and you won't even feel it. When you start getting to the point of like 20-30% of your portfolio and something goes wrong with that overnight, you know, you're starting to get to the point of view where you need 70% of your portfolio to go right, and there's no guarantee that 70% will go right. You know, say you've got a 60, 70, 80% hit rate, it's starting to get lower and lower, isn't it? Like, and then what's going to go right there? So that's the big thing. You don't want to be in a position where it starts to get to that point of view. Now, for me, obviously, I was buying heavily in the DraftKings dip. And on top now that I've got already on my largest position, another 40% gain on that position is starting to have a lot of weight in my portfolio. Now, as you can see, the point of view is that I don't want to sell, because for me in the longer term, DraftKings has only got better in the last kind of 2 years. Now, there is a bit of a threat in the short term, and that might cause a bit of a wobble in the share price. I mean, you've seen how quickly these share prices can move. You know, if there's any sort of hint to the market that, oh, ESPN are taking a little bit of share here off DraftKings, you watch, market will suddenly, the sentiment will boom, go again, and it will move in the other direction. And then you'll go, oh, I wish I took a bit of profit off the table when I was up so much. And I've seen a few people do this quite often. I've seen this quite often where people will hold stocks for such a long time, and I massively agree. You know, long-term holding, you want to hold your winners 100%. But it's got to be a point of view where you just take a little bit of profit off the table. You don't want to be in a position where you hold stocks for 5 years and you never take anything off the table, and then all of a sudden it turns out something happens, you lose a major contract that makes up 50% of the revenue, and you lose all those gains that you've had for 5 years, and you've got nothing to show for it. This happened a lot in 2021. There's so many share prices that went bonkers in 2021, and everybody was going, oh, look at my portfolios, and we had the major correction where most valuations went back to where they were before the CV times. And people that had so many gains in 2021 went flat down because they had nothing to show for it. And all those people, and I think particularly those sort of people, are the ones that really suffered. That it broke them. They kind of moved out the market. They were like, "Whoa, this is a bit of a scam." They turned into maybe even bears. I feel like a lot of the people that you see that are bearish are people that got burned because of the 2021 pullback. There's certain stocks, for example, like National Express, Mobico Group. That's a really good example. So that's a stock that was up over like 150%, I believe, during 2021. A stock I held from 2022. Now, for me, I sold around 20% of my National Express position off. Not all of it, but I sold a bit of a chunk off it, and I was able to walk away with over 100% return on the National Express. Now, don't get me wrong, I still own shares that are down today, and I do think that stock will recover. But for me, I don't look at that stock and go, I've had National Express in my portfolio for 3 years, and I've got nothing to show for it. I can look at that and go, it's a bit stinky that it's now down on that position after I've had it for 3 years and it's gone down. I think it'll still do okay, but the thing is as well is I go, but I did walk away with a bit of profit, so it's not that much of an issue for me. I think it will recover, but I've got profit to show for it. And that's the big thing as well, is that you don't get in a position. I mean, if DraftKings fell off, 20%, 30% overnight, and you went back below your cost basis, and it fell a lot, would you look at this and now and go, you know what? Of course, when DraftKings went from $11 to $30, you know what? I wish I took a bit of profit off the table. But at the same time, you're not in a position where you end up cutting your flowers and watering your weeds. You don't want to be in a position where you sell DraftKings now and then you look back in 5 years' time and then you go, oh, DraftKings. You remember that was a $38 stock, and or now all these Florida's online, Cali's online, iGaming's now 50% of the US states. Oh, the stock now is a 50 billion market cap company. I could have had a stock there that came a 5-bagger. You don't want to be in a position where you went too early either. So the ultimate point I was going to get to anyway was position size. And that's quite a lot. For a risk point of view, if something went wrong overnight, that would probably sting me a lot. It would sting me a lot. And the other point of view is that if, for some reason, DraftKings was to have a bit of a cooling off phase or something like that for a time being, would I be a little bit annoyed that I didn't take the profit off the table? This is the most, not as a percentage point of view, but as a dollar point of view, as a pound point of view, the most I've ever been up on a stock. So for me, this is great. If I ever click sell on this position, I'm going to make a lot of money from this stock. A lot of money. So this point of view is like, just from a so I can sleep point of view and from a risk management point of view, does it make sense for me to just trim that position down? Maybe it goes from 20% to 18%. Maybe it goes from 20% to 15%. Don't get me wrong, I still want to have a lot of shares that hold that in the long term. I want to have a lot of shares that are here because I think this is a great company that's got the long-term targets have even improved for the next 5 years. So I want to still make sure I have a position. But there's that little risk, that's the only thing that comes for me from a risk point of view now, is managing that situation. So when it comes to point of view selling DraftKings, I don't want to sell it. I put up with a lot of this stock in the last 2 years to sell it now and only just sell for the rewards I get, and I think it's got a great future in front of it. So I'm not someone that wants to sell DraftKings. I'm not someone that wants to walk away completely from DraftKings. I don't think it's a time to sell. I think there's plenty of upside that I probably will get from holding DraftKings. So I as a complete sell, I don't believe in that. But for someone that has took advantage of a stock that went way too low, the ultimate question I have is managing the portfolio now. This all comes down to managing the portfolio. And the only thing I'm personally considering DraftKings is managing the portfolio. And like I said earlier, it makes up a lot of my portfolio. And does it make sense from a risk point of view now that I've got so much cash of a portfolio allocated in one position just to take it down a little bit? Just trim that position up a little bit, cut that position size from maybe 25% of the portfolio down to a 20% of the portfolio. And that's a big thing that I'm kind of weighing up at the moment. And so that's where I'm at. I'm not a buyer. I don't need to. I bought so much a year ago that I'm benefiting from those rewards. I'm not a seller because I still think this has many great years ahead of it. I believe this could come, like I said, a 5-bagger for me. From a trimming point of view and a risk management point of view and managing the portfolio, that's the only thing that I have in consideration right now. And that's where I'm at. And that is something that I'm actively doing at the moment. I'm considering, is it time to just manage that risk? And at the end of the day, what a year. If I walk away with this position size and I just say, you know what, I did sell 10% on my DraftKings position, you know what? That would be fantastic to the end of the year, wouldn't it? It'd be really good to walk away from where we were in 2022, and in 2023 to walk away with my biggest position up over 40% from where it was down 50% last year, and walk away with that gain. How good is that? It is fantastic, isn't it? And the other thing that I've got to really consider is that if I am going to walk away with this money, I generally don't want to be sitting on that much money. So if I am going to do it, I also have to tie it up where I see an opportunity. Now, as you guys know, there's still a few opportunities out there. So it's working out where the best place is to put that opportunity. So, yeah, that's what I'm thinking on anyway. If I do make the decision on that, I'll let you guys know on the Discord and the Patreon about my buy and sell and the moves that I'm making. But that's what's going on in my head at the moment anyway. So, yeah, for you guys that have been asking a lot, and especially the topic that we had on the Discord, a little bit more details there for you. Smash that like button, see you in a bit.